Yo, what's up, guys? What's going down? How's everybody doing tonight? These live streams in the evening have been absolutely slow. Everyone shows up for the afternoon live stream, but nobody shows up for the evening one. That's why I've been kind of not doing them as often, the evening live streams, because I mean, I'm not going to put together an hour and a half or so live stream if nobody wants to show up. You know what I'm saying? Guys, so what I got to say is that when things are down, when things are red, when things are boring, that's like the most important time to be paying attention to the charts and to crypto, right? Because then all of a sudden you get blindsided by some massive breakout that you didn't see coming because you weren't paying attention, right? What do we got? Boomer, what's up, brother? I feel like I haven't seen you in like 2 weeks, brother. What's going on? Yamaha, what's up? Good to see you, buddy. Jetpack's in the house. Futures now. Good evening, everyone, and power to the people. As always, guys, make sure you hit the like and subscribe to the channel. Helps the channel grow and costs you absolutely nothing. So, yeah, do something nice for somebody. Bring some good karma into your life. KD3, go green, go. Shane, what's up, buddy? What's up, Jasmy family? Dumb Money's in the house. Rod is here as well. Dumb Money, I'm always here. I know you're always here, brother. I know you always here. So Rick Flow Rick. Yo, party people. What's up, brother? Sorry, I've been watching, just getting work done. Hey, no problem, brother. No problem. I know you'd be perping in the background. I know you'd be around. All right. So looking at Jasmy's chart, still riding the bottom of this trend line here, guys. We need to see a retest of the top of the trend line and either have the breakout or retest it, reject, breakout, confirm the breakout, and then go, right? That's what we're waiting on here for Jasmy. But guys, the thing is right now, there's no volume in the market, none, right? So all of this green that we're seeing right now, it's almost impossible to maintain upside pressure with zero volume, right? You know what I'm saying, guys? So, I mean, unless we get volume, I've said it before, I'll say it again, guys. The beautiful thing is that volume can come into the market pretty quick. So, Crypto Kool-Aid, go Lions. Awesome, brother. Awesome. Detroit. Sean, I'm a huge Jasmy fan, but if Trump does pull off no taxes for U.S.-based crypto and you're a U.S. citizen, wouldn't it be unwise to own anything foreign? These coins would be at a minus 37% disadvantage. I mean, from a very narrow perspective, yes, but holy crap, would you be missing out on a whole bunch of opportunity by only investing in American projects? You might have 100 or so projects, if you're lucky, that you would be able to invest in. You'd be limiting yourself and excluding tens of thousands of projects to invest in, right? That doesn't sound like a very good plan. I don't know. When the market starts to run, everybody's going to start asking you to do more lives. Just keep up the good work. Thank you. Beebs, what's up, buddy? Good to see you, brother. Good to see you. The family is here. All right, let's look at Bitcoin. What is Bitcoin doing? $97,000 right now, guys. We've broken above the 30-day SMA. Well, we're at $96,980. Can we close this daily candle above the 30-day SMA? Is this a bull trap? Or is this breakout the real deal? That's the question. And for you guys to ponder, I will show you the liquidation levels. Well, if Bitcoin crashes, if Bitcoin sweeps back down to 93,600, then $639 million worth of longs will be liquidated. However, if Bitcoin breaks to 99,000, then $411 million in shorts will get liquidated. So, very interesting. We'll see what happens. We will see what happens. Looking across the crypto bubbles. Got to have a look at the bubbles, guys. You got to have a look at the bubbles. Everything looks pretty green, pretty good. I did some dollar cost averaging today because like all the green that we're seeing right now, guys, basically is just recovering from all of the red we saw yesterday. So we're basically on par with what prices were on Sunday, basically, right? Which is fine, There's still some good Ds. So that's why I took advantage and I continued to DCA because, yeah. All right, what else do we have going on out there? So I have a speech from Patrick McHenry. He was a keynote speaker today with Fox Business, Charles Gasparino, right? So we're going to watch that. But first, let's get into a couple other things. Let's see what the news is around the market first. All right, so just in $11.5 trillion, BlackRock, Robert Michitnik says Bitcoin adoption is still in the early stages.
It's interesting because at the end of last year, you saw Bitcoin skyrocket above $100,000 per Bitcoin. You saw that interest really start to taper off at the beginning of this year. You've had an incredibly successful launch. You have had some outflows in the product in more recent weeks. What do you make of that as you enter year two?
Yeah, well, I think big picture, it was a pretty incredible first year for IBIT. Obviously, record setting on a lot of dimensions, including inflows and asset accumulation. And, as we come into year two now, we're focused on a lot of the same stuff that we were in year one, which is really being a valuable resource and an education partner to many of our clients. As we've talked about in the past on this show, we're still quite early days in terms of the adoption of the wealth advisory and the institutional segment. And so we're spending a lot of time engaging with those types of clients.
Is that where the growth is? We just heard from Kavita Gupta at Delta Blockchain, who said institutional is the next catalyst in 2025. I mean, how much opportunity is there?
Well, certainly the third bucket, which we refer to as end investors direct, was gangbusters out of the gates, right? And these other two categories, wealth advisory and institutional, there are much greater hurdles in terms of their process and the research and diligence that they go through.
Of those two buckets, which is a bigger opportunity?
It's hard to pick one, but probably wealth advisory, actually, because there's a lot of sort of momentum around firms that are working through their expedited approvals processes to allow advisors to actually put these ETPs in client portfolios. But institutional is very significant as well, and that's an education journey for many that's been playing out over the year. We're starting to see more of them emerge, particularly over the last quarter, I would say. You saw more institutions and a little bit more wealth advisory in the overall mix of inflows.
Year two, guys, of the spot Bitcoin ETFs rolling up. We'll see what happens. I think it's going to be huge. Yes, Gary Gensler. With less than a week until Gary Gensler resigns, the SEC has sued Elon Musk for alleged securities violations. Big surprise. Gary Gensler files a lawsuit against one of Trump's people just before he walks out the door, just like every chair at the SEC seems to like to do. Let's file a lawsuit and then walk my ass out the door as a final middle finger. William, how you doing, buddy? Fantastic to see you, brother. Fantastic to see you. Top 5 in the house. What's going on, man? So big shock there from Gare Bear. Needs a hug. Needs a hug. Check it out, guys. Was this the final shakeout? Last cycle showed us the same pattern. If history repeats, alts will go parabolic in 4 days. It might be our last chance to turn 1K into 100K this cycle. I think that's a little dramatic, but if you can see, guys, let me remove this here. There we go. If you can see, boom, last shakeout. Are we in the last shakeout down here before? Boop, 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 boop. We shall see. Exciting stuff, no matter how you slice it, man. Exciting stuff, no matter how you slice it. What else do we have? Alex, what's up, buddy? Good to see you, man. Good to see you. Gain is in the house. But depends on CPI. Yeah, CPI is going to be big tomorrow, but Trump could save us. Also, I'm thinking like the 27th is going to be the biggest day of the month because that is when we see Powell speak, the FOMC meeting, and we'll see what happens there. BlackRock took advantage of the dip yesterday and added an additional 4,240 Ethereum worth $13.57 million to their holdings. Their total Ethereum holdings is now a massive 1,118,542 Ethereum. Absolutely bullish. All right, what else do we have? Accumulation continues, guys. The Bitcoin podcast, it doesn't matter if the existing system prints 2 trillion, 8 trillion, or 50 trillion. Bitcoin measured against the price of paper will look like it's going up.
All votes within the existing system are really a vote to who gets more of the theft that comes from you. It's just theater. It's complete theater. Now let's go back to 5,000 years of human history. All of those people before us were always tricked.
It's got music. Can't play it, guys. I'll get copyright dinged. Stupid arseholes. All right, what else do we got? XCN was breaking out, guys. We got all the way up to around 2 cents 80 before breaking back down. But I measured out the symmetrical triangle breakout here. If this breakout happens, we need to close this daily candle outside of here. But the breakout for me, target out of the symmetrical triangle is going to be right around that 3131227 area. I think we might go a little bit, so we'll probably go higher than that, come back down and consolidate in this area. Maybe we'll put in some sort of a bull flag or something, who knows. But that's what we'll be paying attention to on that. Let's go. Powell will be scared of the orange boss. Yeah, I wonder how his stance is going to change after the 20th. I guess we'll find out. Historically, since PPI comes in soft, does CPI tend to come in soft as well? Just curious. That's a good question, Beebs. I never looked into it. I would imagine so. If the producer price index came in soft, you would think that the consumer price index would as well. But anyways, guys, Patrick McHenry, keynote speaker today, guys, on digital assets. So let's watch this. I wanted to watch this with you guys. Patrick McHenry did more for crypto as in Congress than most congressmen did. William, what's up, legend? What's your price prediction on XCN? And have you looked into XEN? I have not looked into XEN. No. My price targets for XCN. I mean, I could see all-time highs happening, honestly. All right, let's check this out. I'm going to skip ahead from Charles Gasparino talking, and I'm going to go right to Patrick McHenry.
While in Congress, he has also had the distinction of being Chief Deputy Whip, where Congressman American can foster like that. But
okay,
good afternoon.
Here's Patrick.
So what I stand before you between you and lunch. That is not the most welcome atmosphere, but I do want to talk to you today about things that will matter to you and do matter and have long-term consequence to the United States economy and to the world. Now, Charlie mentioned a few things in my introduction. One is I served as temporary Speaker of the House, and we had in our over 200-year history of the House of Representatives. We have always elected our speakers. We've never had a situation where a speaker was removed and a period between that time and a new speaker being elected. But that happened in October of 2023. And I found myself in a position serving as the Speaker pro tempore, Speaker for a time, the temporary Speaker of the House. And people ask me how that happens. And, occasionally you have friends and relationships you have, and they say, well, if something bad happens to me, would you be the executor of my will? Right? Or if something bad happens, would you take this puppy into your home? And you think, sure, I'll do that. This will never happen. Nothing bad will happen to you. And so having said yes to my friend that I would serve as his backup if anything happened to him, it happened. And so that day I went to work and came home in an armored vehicle. So be careful when your friends ask you to do something that never will happen. But primarily my service in the House was around financial services policy and the intersection of traditional finance and technology and the linkage of the two. Now the term fintech I think is overplayed at this point because now we have real world finance that is fully digital. And this linkage between digital innovation and the needs of small businesses is of primary concern, not just here in the United States, but globally. And decision making in a fully digital format is the direction, the path of travel. So my message to you today is very simple. Washington is open. The United States economy is open. What is ahead of us in regulation in the financial sphere in particular is different than what we've experienced since the post-financial crisis. Point number one. Point number two is that the era of post-financial regulation, lawmaking, and politics is dead and gone. Those are my two primary points to deliver to you today. So let's first say this question, the second question first. Why is the post-financial crisis era done? And that is because of what happened in 2024 legislatively in Washington, D.C. and in regulation. So let's rewind though. From 2008 and until 2024, all that was debated in Washington on financial services policy was rear-facing. Dodd-Frank was an answer to the last financial crisis in 2007, 2008. It had a one-size-fits-all approach to what was a diverse and changing economy. We then had the legislative response to fix Dodd-Frank, which was called S-2155. Such a powerful and important law that they didn't give it a name. But that's all rear-facing. Then we had a new crop of regulators with the Biden administration and got appointed, and they said, well, this is what you do when you're a financial regulator in an administration like the Biden administration. You walk around with a hammer, and if anyone puts their head up, you whack it back down. And so their response was rear-facing as well, to the point where the vice chair of supervision at the Federal Reserve gets appointed with a bipartisan vote and is thought to be a moderate in terms of his regulation and his view of regulation, and yet he governs as a progressive from the left, and proposes a capital rule for financial institutions, for banks, in excess of what the Europeans were doing. And it was an overreach, but he didn't recognize at the time it was an overreach. It was beyond that which his colleagues could bear, and he didn't recognize that at the time. And third, he used it as justification in response to the regional bank crisis of March of 2023, even though his answer has not a damn bit of thing to do with those bank failures in March of 2023, the quote-unquote regional banking crisis of 3 banks in the United States. So his response was rear-facing. All the debates on Capitol Hill have been about those revisions to existing law and existing regulation, nothing forward-looking. And yet, at the same time, the global economy has moved at lightning speed because of digitization of all of society. And that's before we talk about AI. So why did 2024 call an end to the financial crisis? Number one, Michael Barr's capital rule at the Federal Reserve that hoisted bank capital above European standards in the name of crisis response was rejected by his peers, a majority of whom were appointed and confirmed by a Democratic administration and a Democratic Senate. Point one. Point two, on Capitol Hill, we had, for the first time, massive bipartisan legislating on financial regulation of a new market. And that is with the passage of FIT 21, which gives market structure legal clarity to digital assets. It's the American response to what the Europeans are doing, what they're doing in Hong Kong and Japan and Singapore. It is our American response to this international pressure set around digitization, blockchain technology, and crypto. We had significant, almost every Republican in the House voted for that bill, plus a third of the Democrats. That is the largest number of Democratic members that have voted for a Republican bill in financial services policy in the last 20 years. Those two items mark an end to the post-financial crisis. That is a welcome and good thing. Now we can be forward-facing and recognize that we have to live for tomorrow. We have to compete for tomorrow if America is going to remain at the top of their game, the top of our game economically. We have to catch up to the pace of digitization of our world, and we have to make sure that we are equipped to deal with the changing formats that we will have across our society, but especially in financial services, with the deployment of artificial intelligence and these new capacities around software. And America is adept enough to harness these opportunities and to be at the forefront of the deployment and distribution of AI and AI systems, especially in our most heavily regulated spheres. So Washington is open for business. Now let me tell you about that. There is the initial response around markets for a presidential election, in anticipation of a presidential election and the immediate aftermath of the presidential election. And you have major market movement before any new president comes into office, almost 90 days after they're elected. And it's an absurd thing. In other countries, you have a much more logical way of doing this and a tighter timeline, but we're Americans and we do things in a weird way. So that lag time before the administration comes in, everyone is cognizant of. So the inauguration date of January 20th, we know is a fixed time period. And so there's immediate response in the financial markets, especially with heavily regulated financial institutions. And they say, well, we're looking forward to January 20th. Well, you know what happens on January 20th for financial regulators? Nada. Zip. You have to confirm these important positions, and that takes time. So things will happen both faster and slower in an open Washington than you expect. Faster because now, with new seats and new regulators in these important seats, you will get a yes, and a yes will mean yes, and a no will mean no, and you will get a quicker decision. And that is a mighty powerful thing when it comes to federal regulation. There is a technology permissive, technology open, growth-oriented set of folks that will come into these important seats. So faster, that is good, that is powerful, that is meaningful.
Shots at Gary Gensler.
Slower because it takes time. It takes time for the Senate to confirm nominees. It takes time for nominees to be nominated. Case in point, Joe Biden had a very heavy focus and wanted Gary Gensler to be at the Securities and Exchange Commission early, fast, and to go hard, mainly with a baseball bat. But he wanted Gary Gensler confirmed early. Gary Gensler was confirmed and took office in late April of 2021 with a Democratic Senate and a Democratic president. OCC, the primary regulator of banks in the United States, the Office of Comptroller of the Currency, the comptroller in the first Trump administration took office in November of 2017. These things take time. So the slow piece will be getting the right people in the right seats of power. And once they're in those right seats, you will see the speed and the cadence pick up. But it's not going to be overnight, and it will not be fast and dramatic, at least in the initial days. So my message to you is to engage in an open Washington and to recognize what you see in rear-facing policy and what we see in the days ahead are going to be different. And in many ways better, but in some ways quite uncertain, because we don't know who's going to take these important seats, who's going to be the chair of the FDIC, who's going to be the comptroller of the currency, important things that an audience like this knows and understands they're important. But if we go out into polite society and say that we're concerned about who the comptroller of the currency is, they may have us arrested for being nutters. So those are the things I wanted to make sure I conveyed to you. Speed is important. Speed is important, and in a changed open Washington, that cadence will pick up, and it will pick up in a meaningful way that will be good for digitization, good for the deployment of technology in the world of finance, and the deployment of AI in these new systems as well. That is a welcome and good thing. Now, everything with this new administration, like any new administration, is uncertain. But we want to take welcome signs where they are. And an encouraging sign that America is open for business has already been seen, and it's been seen by the financial markets, it's been seen by the globe, and a changed atmosphere on national security. But in our world of finance, it will be the primary beneficiary of a different set of regulators that understand the world of finance and understand the deployment of technology and are growth oriented. That is welcome and good. So look forward to your questions, and thank you all for having me.
Fascinating stuff. Particularly like crypto, and
Yeah.
I mean, the crypto business thinks they put Trump into office.
Well, you know,
the
amazing thing about President Trump is that all the people that think that they're the ones that did it,
Right, of course.
and those that take credit for it. But you know, that's always the case with every election.
Well, where do you see crypto regulation going? Because it is an interesting question. You know, Trump has obviously made a case to you know, end the regulation by enforcement. That was the criticism of Gary Gensler's SEC.
Yes.
The SEC is going to play a role, I would assume, in crypto regulation going forward. So will the CFTC. Where do you see it going?
So where I see it going is the House legislative response to crypto regulation is a bill called FIT 21.
Yes.
Fit for purpose.
And that's your legislation.
Yes. Well, it's not mine. I chair the committee. The chair of that subcommittee, the digital asset subcommittee I created,
Right.
is a man named French Hill, who's now the full committee chair. He took my gavel. That is his piece of legislation. He was the primary author of. We crafted it together. We worked together intensely on it. But that tells you the direction, the course of travel here, which is the bill that we got a 2/3 vote in the House of Representatives in a Congress that's quite broken, was quite broken. It may still be, but it's a new Congress. But in a broken Congress, we got a massive bipartisan victory. So I think that's the starting point, number one. Number two, you have a disagreement between the CFTC and the SEC, two agencies Congress created, and they both want to own crypto and crypto regulation. It's for Congress to decide when you have two disputed agencies and a lack of clarity under law. Neither what was contemplated in the 33 and 34 Act for securities and creating the Securities Exchange Commission, what was contemplated in the key acts governing the commodities regulatory regime, neither one of them contemplated something that is a digital asset, digitally native, with these qualities. And so we have to step in and say, this is a distinct property that is neither a security nor a commodity. If constructed and fully decentralized, it could function like a commodity, Or if it's centralized, then it's really something like a security and should be regulated as a security. Congress has to decide and go through the threshing of the regulators.
And you think they'll do that?
I think that will happen. I think that will be a key legislative success for this administration and a bipartisan set of leaders in the House and the Senate that have been working on this for years.
So it seems what you're saying is like the power of the regulation of crypto will move from the SEC to the CFTC as you become very strict in those definitions.
Primarily, but if you're going to raise capital in America, raising capital is done through our securities laws, or in certain distinct ways at the states. That will not change. So what is native to the SEC and raising and the regulation of raising should stay at the SEC.
And
but
disclosure, obviously.
Disclosure, and the things that have the properties that require disclosure. What kind of disclosure do you need on Bitcoin? It functions like a commodity,
right?
And it is a digital commodity in any reasonable view.
Nobody's raising money to build off of Bitcoin.
There's no outside raise. Who are you going to send a Wells notice to? I look forward to, that's a wonderful question to Gary Gensler. How do you find Satoshi? How do you knock on Satoshi's door?
What did he say?
Oh, he has no clue. So,
so Ripple. Do you think that's a security or a commodity?
It's a very complicated court case and a very complicated set of history on its creation, and I'm going to leave that to the courts to figure that out.
Very diplomatic. Back to the SEC and the CFTC and the FDIC and the Fed and the Treasury. Why do we need all these companies regulating our banking system and securities markets? It seems like it's so duplicative, and it seems like it probably hurts capital formation.
So going into this, let's rewind here. Going into the financial crisis, there was a goal of us on a bipartisan basis on Capitol Hill. We said, look, we have too many financial regulators. It's too complex. And in Dodd-Frank, both Chris Dodd and Barney Frank stated as their goal to reduce the number of regulators and have clarity.
That didn't happen.
Well, actually, we came out with reduction of one regulator and a creation of two new regulators, so a net one. So talk about intentionality and lacking that. So this has been a long-time stated goal of Congress. We have created these agencies without looking at history and the design of this. The first federal regulator for banking and capital markets was the OCC, a creation during the Civil War. We have to clean this up. We have agencies that have presided over repeated banking crises, like the Federal Reserve regulatory sphere, Federal Reserve overseeing banks. We have an agency that is in disarray and has had terrible leadership and terrible treatment of its employees and is not delivering well.
That's the SEC.
FDIC.
Oh, the FDIC. Okay.
And then we have the OCC that just sticks to some really boring, good stuff, and everybody forgets about them. Well, it turns out if you're in banking, you kind of want to have a boring regulator. You don't want to have ones that have basically frat parties every night at the FDIC. And you don't want to leave it to the Federal Reserve that has had a bad history of presiding over bank failures. So why don't we give it to the boring agency that knows what the heck they're doing? What we're going to see over the next couple of Congresses is systemic reform to these agencies and a narrowing of their purpose and putting them where it should be fit for the purpose of overseeing these institutions.
Do you see, and this comes up every time there's a change in administration,
Sure.
Will the SEC merge with the CFTC?
No, not going to happen.
Now why? Because the Agricultural Committee has some jurisdictions.
So you divide these jurisdictions on Capitol Hill. The Ag Committee in the House and the Senate oversees this whole world of agriculture, but they have this one thing that is this massive enterprise in Chicago and in the world of commodities. They're not letting go of that thing. They're just not. As a Cub member of Congress, I had an amendment in a Financial Services Committee markup, and this was one of the early lessons I had. I was taking jurisdiction out of a quirky bit of banking that is regulated by the Agricultural Committee, and I wanted to put it under banking regulation. Very simple thing, makes sense on paper, and the buzzsaw I got put through from the world of agriculture. I didn't know I had so many farmers in my district. And so the difficulty of merging those agencies is all about political power. And just take that off your top 10 list of things that, of outcomes that are possible.
All right. You've been a critic of Gary Gensler, the SEC chair.
A little bit.
A little bit.
A little bit.
And I think you did it in a very measured way. You stuck to the facts. But you can make a good case that he did some significant damage to the agency. It's not quite as crazy as the FDIC, but there's a morale problem. There's a mission problem. I mean, he went from, essentially an investor protection, capital formation agency to, something of the arm of the Democratic left with climate disclosures. Then there's regulation by enforcement on crypto, which, essentially, in many ways, pushed that industry offshore. How much damage do you think he's done to the agency? And can it be reversed by Paul Atkins, who's a very measured, smart securities lawyer, essentially?
Look, you can have a massive cultural impact on an agency quickly. The rebuild takes time. And working with people is slow. It's a slow and methodical process you have to build to build trust with people. So it will take time to repair the damage that Gensler is wrought on the SEC. Paul Atkins is the right person to lead this agency. He understands the law. He has the right capacity right capacity to lead and build consensus. And I think that is what the agency desperately needs. It's a great and important agency.
Oh, yeah.
It's important that America remain the center of capital formation for the globe with robust, deep, and liquid markets that are safely and smartly regulated.
That's not happening now. Let's face
Well, what we had with the Biden administration was the height of social policy making in the world of finance. Leaving the Biden administration is far different than what we saw 2-3 years ago. The politics around ESG, the politics around corporate governance, making social issues more important than capital formation or market regulation or safety and soundness, that day is dead. And that is a welcome and good thing for us to compete around the world.
Every so often markets get a little crazy about deficits. Congress for years has been trying. I remember Graham Rudman Hollins. That's how old I am. Okay, and we know where we are now: 36 trillion in debt. We are now running a $2 trillion budget deficit. The pre-COVID Trump deficit was not great, but it was less than $1 trillion. And now the 10-year, which is a key barometer of market sentiment on the deficit, is starting to approach 5%, which is pretty scary if it does hit 5%. It's at 4. Last I checked, was at 4.78. How scary? Should we be really worried about this? I mean, is the market signaling to us that it's got to end this spending?
Well, we've lived from the financial crisis to now in effectively the Fed monetizing our debt. You can call it different names, but if you step back from a layman's point of view, that's obviously what they're doing. They're floating, they're determining the lending for our federal government.
Absolutely.
They're participating in the market in an active nature way. It's hard to not call it monetizing our debt. The world's onto this, and without structural changes to the way we spend money in Washington, we will suffer severe consequences.
Do you think this administration is willing to do the structural stuff?
I think DOGE is a welcome and good thing. When you have high-level emphasis from the outside, from executives, saying we're going to participate in trying to fix government, it is highly necessary.
And ambitious guys too. Let's face it, they want to do it. Right?
Not marginally ambitious,
yes.
Deeply structurally, strongly ambitious, and they can change structures. And that's going to be necessary for the type of debt and deficit we currently have. The last time we had a wholesale remaking of our federal government is the 1920s. The last time. It is time. We have a federal government that is beyond our capacity to pay for it.
It's 100 years.
Size.
So you think this is the year?
This is has to be a part of the debate. When we negotiated the debt ceiling agreement in May of 2023, Republicans in the House did the best we could with the Democratic Senate and a Democrat president in the White House to bring to pare down spending, to actually reduce spending year over year for those annualized appropriations. We did that, and we had Speaker McCarthy's success is bending that spending curve. Now it's since been broken with deals that were put together at the end of the last Congress, but that is the first sign that we're going to start heading in the right direction. That debt ceiling agreement from May of 23.
Have you ever thought twice about turning down being speaker?
No, because
Sorry.
The way I functioned in my federal service is that it is service, and when you're called upon to lead, when you're called upon to play a role in something important, you say yes. My successes, my legislative successes of this Congress, the leadership that Congressman Garrett Graves and I, who negotiated the debt ceiling agreement with the White House on Speaker McCarthy's behalf.
And you were willing, one of the things I found interesting, you were willing to deal with Maxine Waters. How did you deal with that?
Look, you work with people as they are, where they are, how they are, and you work together on the things where you can find some consensus.
Now, but it's interesting about you, Mr. McHenry, is that when I first started covering you, you were a firebrand. And then you became very quickly you became, I would say, a statesman, and you actually showed her incredible deference, which I believe it's a deference she wouldn't have showed you or other people.
Yeah, but
how did that happen?
But in politics, and the way I was raised is I need to treat people the way that I am compelled to treat people, which is well. And they owe me nothing in response. It is incumbent upon me. It's forced on me, and because the way I'm built, it's out of obligation and a sense of responsibility. And what I would say is when we have the eye, when public servants have the eye, that you're there to do the public good. It's not about your own stature. It's not about you building your own nest. It is about doing the public good. We get better results.
So you suck it up and deal with Maxine and get the job.
Yeah, you got to do what you got to do.
One more question, because we're out of time. I got to ask this. What are you doing next?
I don't know. I'm trying to figure that out.
There's a lot of people you can hand your resume to here. But...
Well, I'm trying to figure that out of putting together work with great companies in the world of finance and in technology. Great opportunities, and I'm really optimistic about our road ahead.
All right, I got to ask one more. I'm sorry. I know everybody's hungry. AI, will it cost jobs or not?
Short term, yes. Long term, a great job creator. We're going to have new markets. We're going to have new opportunities. We're going to be able to do things in a decade that we could have never conceived of.
So we shouldn't be scared. I was listening to Tucker Carlson. He scared the hell out of me about
Oh,
AI.
look, technology in the short term.
I need my job for a few minutes more. I got to pay the mortgage.
You're irreplaceable, Charlie. We watch you. We can't get that from.
Can't get that from a hologram,
can't get that
right?
with a bot. No, the Charlie Gasparino bot. That would be fun. But in the short term, it's complicated. In the long term, it's a winner, and I'm optimistic about AI deployment and in America's capacity to have a rules-based regime with speech rights embedded into this technology. That is a game changer for the globe.
All right. Well, that's it for us. Thank you, Congress.
Thanks, Charlie.
Excellent job.
Appreciate it. Thank you. Well done.
I will say, guys, I have nothing but respect for Patrick McHenry. If it wasn't for him, things could have been far worse with the SEC and Congress and the Democrats attacking crypto over the last 4 years. This man was a knight for the crypto and digital asset space. So absolutely, we owe him a debt of gratitude. Sam, I'm loving this pullback. It gives me time to really load up on stuff. I'm just a couple thousand tokens away from 100K, Jasmine. Nice. Congrats, man. Bruno, what's up, buddy? If you look at the monthly on XCN, it formed a double bottom pattern. Am I the only one that sees this bullishness, or am I seeing things? Sounds good to me, brother. Sounds good to me. Funky. Time flies when it's green. Yes. Seems like we just finished a video. Love it. I am Jasmy. We're all Jasmy. 40 push-ups. No. Au contraire, mon frère. It's 50 push-ups. Bank regulations versus no bank at all, just protocols. Bank buildings will eventually be obsolete. Yes, transfer money to a wallet. I was just having a conversation about that with my wife this evening, Jetpack, explaining how these protocols like Onyx Coin are going to make banks obsolete. This is what bank, yeah, 100%. Eventually, every digital wallet, even MetaMask, will come with its own staking Visa card. Yes, exactly. Making banks basically useless. Yep. That's why banks are trying so hard to get the rights to custody crypto right now, right? But even if they do, are they going to offer you the same APR as the protocols are? Probably not, right? Pulse Player, why is hasn't so weak? What's that? What? Why is Jasmy so weak? What's that about? Jasmy's not so weak. The pump we're seeing in the market right now, there's no volume behind this pump. I covered that at the beginning of the stream. There's no volume, so this is going to be difficult to sustain. The volume in Jasmy's only 111.61 million right now, so we need some volume to start pouring into the market. That's, we see pumps all the time with no volume, and then what happens the next day? We come back down again, right? So that's basically the hard truth of it, man. The hard truth of it. Let's go look over at Bitcoin's chart again. Holding 97,000. Holding 97,000. All right, guys, listen, get your butts over to the Patreon, guys. Schedule your one-on-one coaching AMAs with me. I'm going to be live over on the Patreon in about 15 minutes. We do group video calls over there every evening, guys. So get in there, join our group video call. You can see and hear everyone else in the community. You can listen in. If you're new to crypto, you get to listen to all the experienced people throw things around and chat. And like a lot of the newer people in the community over there are telling me that they learn a lot just by listening to a lot of the veterans in the industry talk, and they're taking notes and they're learning and stuff like that. So even if you don't want to jump on and be seen or heard, you can still sit there and watch and listen in. So it's a great learning opportunity. So get over there and do that, guys. We will be live in about 15 minutes. And again, you can schedule one-on-one coaching AMAs with me personally and so much more, guys. The link is in the description. It's in the pinned comments. It's in the chat. Click like if you like this video. Click subscribe if you really liked it. And I will see you guys live over on the Patreon in about 15 minutes.